Understanding and managing payment risk is an integral aspect of doing business in today's digital economy. But what exactly is payment risk and how does it impact different merchants based on their varying risk levels? This video aims to answer these pressing questions and more, offering a detailed examination of low, medium, and high payment risk levels, the challenges associated with each, and the strategies merchants can employ to mitigate potential hazards. Understanding payment risk. Payment risk refers to the potential for loss associated with processing credit card transactions. Factors such as fraud, chargebacks, and regulatory compliance can impact a merchant's risk level. The classification of a business as low, medium, or high risk can affect its access to payment processing services, with some companies struggling to find providers willing to accommodate a merchant's unique business needs. Low-risk merchants. Businesses classified as low risk typically operate in stable, well-regulated industries with a low probability of chargebacks and fraudulent activity. These may include brick-and-mortar retailers, restaurants, or personal service providers. The advantage of being low-risk merchant is easy access to payment processing services at competitive rates, typically without significant restrictions. Nevertheless, even low-risk merchants still need to be vigilant. According to the Federal Trade Commission, credit card fraud in the U.S. exceeded $1.9 billion in 2021, emphasizing the need for even low-risk businesses to employ strategies like secure transaction processing and strong fraud prevention tools to maintain good standing. Medium risk merchants. Businesses labeled as medium risk fall between two extremes. They may operate in industries with a moderate degree of regulatory oversight or have a somewhat higher rate of chargebacks. Examples could include online retailers, subscription-based services, or ticketing sales companies. Being a medium risk merchant can pose challenges, particularly around payment processing. These businesses may encounter more stringent underwriting processes, higher processing fees, or be required to maintain a reserve account to cover potential chargebacks or fraud due to losses. Medium risk merchants should invest in robust fraud prevention tools and employ strategies like customer authentication and proactive chargeback management. The latter is especially crucial as data from Chargeback Gurus reveals that businesses lose roughly $80 billion annually to chargeback fraud. High-risk merchants. High-risk merchants often operate in industries prone to regulatory changes, high chargeback ratios, and increased fraud risk. These might include gambling, entertainment, e-cigarettes, or telemarketing companies. High-risk merchants face significant challenges in securing payment processing services. Many payment service providers avoid servicing these businesses due to their inherent risks, leading to a more limited pool of options, often accompanied by higher payment processing fees. High-risk merchants must engage in stringent due diligence to meet compliance requirements and maintain good standing with their payment processor and industry regulators. Underwriting process for high-risk merchants. The underwriting process is a critical risk management strategy for payment service providers and acquiring banks. It involves a comprehensive review of a business's financial stability, processing history, creditworthiness, and compliance with relevant industry regulations. Merchants may need to provide a range of documentation, including business licenses, processing statements, and even personal credit information. While the underwriting process can be rigorous, it is a necessary step for high-risk businesses to secure payment processing services in a compliant fashion. Compliance and risk management. Maintaining compliance is a must for businesses of all risk levels. This can involve adhering to regulations such as the Payment Card Industry Data Security Standard, PCI DSS, or GDPR. High-risk merchants may also be subject to industry-specific regulations requiring extra vigilance. Payment processors offer various tools to aid in compliance, like tokenization and encryption for secure data handling. Merchants can also benefit from fraud detection tools that analyze patterns in transaction data to identify and block potential fraud. Chargeback management is another crucial aspect of risk management. Merchants can utilize services that provide real-time alerts of chargeback disputes, allowing businesses to address issues promptly and avoid costly fees and losses. Here are some practical tips for merchants. 1. Invest in fraud prevention. Whether you're a low-risk or high-risk merchant, investing in fraud prevention tools is crucial. Look for solutions that include real-time fraud scoring, device fingerprinting, and machine learning capabilities. Number 2 is proactively manage chargebacks. Employ a proactive chargeback management strategy. This can involve tracking chargeback reasons, identifying patterns, and addressing recurring issues at their source. Number 3 is stay compliant. Stay up to date with the latest regulations in your industry and ensure your business maintains compliance to avoid penalties and maintain a good standing with your payment processor. And number 4 is select the right payment processor as your partner. Choose a payment processor that understands your industry and can cater to your unique needs as a business, regardless of its risk level. Number 5 is find secure payment gateways. Secure payment gateways help ensure customer payment information is securely transmitted. They are compliant with PCI DSS standards, providing another layer of protection. Number 6 is research and determine if 3D Secure authentication is right for your business. 3D Secure, or 3DS, is a security protocol that adds an extra layer of protection for online credit and debit card transactions. It helps verify the customer's identity before they complete their purchase, reducing the likelihood of fraudulent transactions. Find the right payment processor. For high-risk merchants struggling to find a conventional payment processor, consider finding one that can issue you a high-risk merchant account. These are special accounts provided by acquirers willing to accept a greater level of risk. While these accounts may come with higher processing fees, they can provide access to vital services that otherwise might be unavailable. These providers specialize in high-risk merchant accounts, offering customized solutions and support to suit unique business needs. The role of payment service providers. Payment service providers play a critical role in managing payment risk. They ultimately bear the responsibility of conducting due diligence on the merchants they serve, a vital task to ensure they're not facilitating illegal activities or exposing themselves to excessive financial risk. Providers must also maintain their compliance with various regulations and standards, including anti-money laundering, AML laws, and the PCI DSS. This ongoing effort ensures the integrity of their services and protect both the merchants, the consumers, from potential financial loss. Embrace the challenges and opportunities. Merchants of all risk levels face their own set of challenges when it comes to payment processing, from conducting due diligence to managing chargebacks and maintaining regulatory compliance. Navigating these complexities can be demanding. However, there are also opportunities to turn these challenges into competitive advantages. By investing in robust fraud prevention and chargeback management tools, staying informed about regulatory changes, and building a strong relationship with a reliable payment processor, merchants can improve customer trust and grow their business in a secure and compliant manner. So, where does your business fall within these risk categories? Understanding your risk level can help guide your strategies and decisions as you look to provide secure and reliable payment processing to your customers. Remember, managing payment risk isn't just a protective measure, it's an essential component of maintaining a successful, thriving business. For more tips and insights to elevate your payment strategy, visit us at next.io.